fairly big, as it is with this box over here. As you can see, the market's expected to come down into the middle of that box, and if you watch Hurst signals or even our live analysis system, you'll notice that very often those projection targets are really very good. But what tends to happen is that the range is fairly big initially. Before the peak has even occurred, the range is quite large. Once the peak has occurred and price starts to cross those FLDs and VTLs, the unfolding price movement and the unfolding cyclic picture enables Sentient Trader to refine that target as price develops. So the important thing is to position yourself correctly for the move. So, we're expecting a move to the downside. As that move unfolds, Sentient Trader will refine that target until eventually you'll see a picture very much, in fact, what you're seeing here, which is that the nearer target is quite small, as you can see there, whereas the further target is much bigger. Okay, but as price moves towards, as the cyclic picture unfolds, the target gets refined, and and it gets more and more accurate as you get there. Trading with cyclic theory is a bit like it's a bit like driving through the mist. You can only see as far as your headlights extend. But if you've got a GPS, which is Sentient Trader, then there's some curves coming up ahead. But you've got to wait until you can see them in the revealed by your headlights before you know exactly where to turn. Just entirely as an aside, that reminds me of I'm a very keen aviator. I have a private pilot's license, and when I was doing one of my training courses in South Africa, where it's possibly a bit of the Wild West in terms of aviation, I had a training instructor who lined me up on the runway and said, okay, now put on your hood, which means you can't see out of the windscreen, and using only the instruments in the airplane, take off this airplane. In other words, a full instrument takeoff. I only discovered afterwards that what he did was illegal, but I performed a full instrument takeoff in perfectly clear conditions, and he was sitting next to me, so he could have reached over. But it had to be one of the most terrifying things I've ever done. And sometimes I think of the markets a little bit like that. From your instruments or from Sentient Trader which way the runway is facing, if you like, but you need the visual evidence from your eyes, which is, as you can see a little bit further ahead of you. So yes, I know landing is not. I never did a full instrument landing either. Okay, Chris asks, is it possible to describe how the boxes are drawn? Yes, absolutely. It'd probably take me too long to describe exactly how they're drawn, but I can explain to you. The boxes are called FLD pattern projection boxes. Okay, and the reason for that is because Hurst spoke about how FLD lines form patterns, and if I again draw the FLD lines here, then you can see the patterns that these FLD lines are forming. Okay, there's an FLD line for each and every cycle, and so these lines form patterns, and we're looking at a monthly view of the chart at the moment. So they're very simplified patterns, but you can see here what's called a cascade pattern. I showed it to you a moment ago in the on the daily resolution, but here you can see the cascade pattern. Okay, so the way in which you interpret patterns is that when price crosses, median price of course, crosses an FLD line, a projection is generated, and you get confirmation of a peak or a trough in the cycle. And the same thing happens with VTL lines, but let me not get complicated by introducing VTL lines into here. Let me just speak about FLD lines. I see, sorry, Bruce says, can you make the FLD pattern dialog box remain visible longer? Yes, I will do in a moment, Bruce. Let me just finish explaining how they're generated. So what happens is when price crosses an FLD, a projection is created as a result of that. Okay, so I don't know if you can see at this sort of scale, but if price were to cross, and that's a hypothetical if price was to cross the 20-week FLD, then a projection would be created. Okay, those projections are displayed in Sentient Trader as simple outline boxes, and I'll put them up in a moment as well. In achieving that projection, often price will cross another FLD. Okay, when it crosses that FLD or VTL or anything else, then another projection will be generated from that point. Okay, so then we get a second projection over here, and that projection will often cause price to cross yet another FLD, and so on and so forth. Okay, so that's what an FLD pattern means. That's why these patterns mean what they mean, is because of the fact that once one projection has been generated and then fulfilled, another one is generated, and so on and so forth. So what Sentient Trader does, one of the issues with understanding an analysis once you've performed it using Hurst cyclic theory, one of the difficulties is you've performed the analysis, but now what does it mean? And I always struggled with that. And there's so many things to think about. There are FLDs, there are VTLs, and there are all those kinds of things. So Sentient Trader puts them all into one thing, which are these FLD pattern projection boxes. Okay, so in fact, what Sentient Trader does is it generates for itself a dummy price movement, if you like, and in fact, it uses a cyclic model on the basis of recent cycles and the amplitude of those cycles and all those kinds of things, and it builds for itself a dummy price movement. And it has a look at when that dummy price movement would cross FLDs and VTLs. When it would cross an FLD or a VTL, it generates a projection, and it says, okay, let's assume price achieves that projection, assuming the markets are ideal. Then what else would happen? And so it builds up a whole sequence of information. And in fact, you can view this information. You can read all about it if you like. On the projections tab, where you're told current FLD pattern projection. Okay, there it is. It says price is currently moving up in an active FLD pattern about to cascade down. The first FLD pattern sequence projects a price movement down to a target, etc., etc. Okay, I won't read it out to you, but you can read basically how it has generated that pattern projection box. So Bruce wanted to see, was it this window here? You can select which cycle you want to view the pattern projections for. You can view multiple of them. Okay, so you can see that there are the 40-week, 18-month, and 54-month. Of course, once you plot more than one or two, it gets to be just a bit of a mess. So obviously, the easiest thing to do is to plot only one of them. Okay. Joe, how are trigger lines used and how are they interpreted? Okay, trigger lines are used in this way. First of all, there are always two prediction boxes for each and every cycle, which represent the current move the cycle is in. As you can see, the cycle's moving up, and the next move is going to move down. Okay. Then the trigger lines, I call them trigger lines because they stem from the trigger point, which is either the trough or the peak of the cycle. And as you can see in this example, the first box will always have a specific trigger point, in this case this trough over here, and it's projecting price to move upwards. Now, generally, one expects price to remain between these trigger lines, okay? But the markets aren't perfect, and they never move absolutely perfectly. So what will happen is they will often exceed the lines to one side or another. One way of using these trigger lines, a way in which I often use them, is that when price has exceeded the trigger line to one side or the other, So here you can see price has come way above the trigger line. You expect price to return into this zone. Okay, you expect it to return into that zone generally before it forms its peak in this example. Okay, so that's one way of using trigger lines. The other way of using trigger lines is to see whether sentient trader believes that there is any evidence that the trough or the peak that you're waiting for has already been formed. And the way that you do that is you look at the trigger lines for the second box. Okay, this second box, these trigger lines, hopefully you can see, are coming from the middle of this red box. Okay, that's because sentient trader believes that this peak has not yet been formed according to this analysis. Okay, whereas if we switch to the alternate analysis, which I believe might be a play, then you can see here the trigger lines for the second box have in fact been moved over to this peak over here. Can you see those trigger lines? They are not coming from the center of this red box, which is where they would normally come from. They're actually coming from the top of that bar. Okay, that tells you that sentient trader believes it's possible that this peak is either has happened or is about to happen right now. Okay, so the other way of using those trigger lines is when those trigger lines move over to a peak or a trough, then you should be on hot standby, if you like. You should be on hot standby for the fact that that this peak has already formed. Okay, that's how I use those trigger lines. As a matter of interest, everything in Sentient Trader generally is presented in two ways. It's presented in terms of graphics, which I find nice and easy to work with because I'm a fairly graphic sort of person. But it's also presented in text. Let me see if I can quickly demonstrate this to you. I think it'll be for the wrong cycle, but if you turn on your Hurst cycle synopsis, okay, then in fact the same information that is presented in these pattern projection boxes is presented in this cycle synopsis. This cycle synopsis is generated when the analysis is performed, which is why the cycle synopsis here is for the 80-day cycle, because I had the 80-day cycle selected as the cycle I was interested in. I since changed my mind, and I'm speaking today obviously about the 54-month cycle. So that's why that particular Hurst cycle's synopsis information is not of particular application to these boxes, but I'm sure you get the idea. So the same information is presented in graphic format and also in text format on the chart if you show that Hurst cycle synopsis information. And if you do that, then the fact that the trigger lines have moved is also represented in that text information, because it will say price is expected to fall towards a trough from a peak which possibly occurred on such and such a date. Okay. There was one final thing I wanted to mention. I presented three alternate analyses of the really long-term picture of the Dow Jones Industrial Average, and I think I've demonstrated that it doesn't really matter which of those analyses is correct. We need to be wary of the fact that the markets are about to be in for a nasty knock and a fall. Okay, that's what makes Hurst analysis constantly interesting. There's something else that I would like to mention and to point out, and that takes us back to what we've been talking about recently in Trader Chat, what I've been speaking about in ST Outlook. A lot of analysis comments in the forum have been speaking about it, and that has to do with what's been happening most recently in the markets. And I want to draw a really interesting parallel with 1974 here. So for those of you who've been watching that comparison, there's something really interesting to point out. Okay. This is the picture according to the sort of default analysis that most of us have been following for quite some time. The highlights are an August 2007 54-month cycle trough, okay, then a much lower 18-month cycle trough in March of 2009. I'm trying to zoom this chart in to demonstrate something to you. Okay, there it is. That's the most recent time. Now.